Yo guys, so today is another market day, every day of the week, Monday to Friday, the market is open. So today I just want to show you guys how consistent my pattern has been. You can see my chart now. You can see my chart. This is the 1 minute time frame. I took some trades yesterday and I sold, but today we had some major news events because the most important thing in trading is time. Without time, you have no business in the market. Without time, you have no business in the market. So can you see my screen now? You will see the major time events today on Thursday for US dollar, and that is 8:15, 8:30, 8:45, 9:45, 10 a.m. and 11 a.m. So this time you should be looking for your setup. If you have a trading setup, this time is the time you should be looking for your setup. So come with me to the market. Let me show you something real quick. So I was hunting already from 8 o'clock. Yeah, this is 8:02. This is 8 o'clock. So from 8 o'clock, I started hunting. Initially, I wanted to sell because my draw on liquidity was this low here, and initially these two lows below it. So that was my initial draw on liquidity. I'm going to like highlight them both for you to see. You see that? So that was my initial draw on liquidity. But price did something funny around 8:15. 8:15 is a time of news. You see, this is 8:15. Price ran down to my liquidity without giving me chance to enter any trade and without providing any setup for me. So I was just waiting for my setup, and price didn't provide my sell setup. And it ran down to my sell side liquidity because these two lows are where people that bought yesterday would still leave their stop loss. People will leave their stop loss here, and people will also leave their stop loss here. If people don't leave their stop loss here, there are some things we call breakout traders. People will want to sell from below this low because they see that price goes below this low. They want to sell. They think price is going lower. They want to sell from below this low because of support and resistance traders. They think price has broken resistance or support. Price has broken support, so they want to sell from this area. But me, my ideology is different. I'm looking for something different. Remember, the most important factor is time, and I have my setup for entry. So I have time and I have my pattern for entry. So see, when price takes out this liquidity here, is 8:24. Remember, 8:30 is a key time. If you see here, 8:30 is a key time of news, major impact news. Look what happened around 8:30. See that volatility. See the way the market ran up. The market ran up and it broke structure. It broke this high. It broke this high. It broke this high. That's what I call a structure shift. So the market shifted structure, and I was ready to enter in a buy position. Remember, I told you in my last video that the best place to take a buy trade is below 50%. And look at this. Market just goes below 50% and bam, you trade here. Initially, I used this gap to trade. This gap that you can see here. Because you see, there's no candle body here. It's just 2 weeks. That's a gap for me. So I used that gap to enter my trade, and I put my stop loss below this low now. So this is it. After a shift in structure, this is my entry. You don't need to have a perfect entry. You can just enter immediately. Price goes below 50%, but I waited for it to enter that gap because I knew that gap price will have to go back to that gap. So I was waiting for it to go to the gap. So after I entered the gap, I entered my buy trade, and my draw on liquidity is this blue line that you can see here. You see those major highs, That was my draw on liquidity. And guess how? Do you know that in Forex we have the way we measure where price would go to? I'm going to show you. So this is how I measured my draw on liquidity. You see this movement here now. This movement here, the way price ran down from up to down. This movement, I measured it using the bodies of the candles. I measured it and I'm aiming for -1. This -1 means it's just like grading this stuff. You understand what I'm trying to say? You're grading this and price is moving like in the same range, one range after that, and initially I would have been aiming for -1 and -1.5. You see how price went one day, but I got out around here. I got out around -1, so because that's enough for me. I don't need to be doing too much, so that's why I got out around. So see this trade now. See this trade. I entered here, put my stop loss here, and see the way price started moving. To time of news again, 9:30. This is 9:30. Time of news again. That's what made the price move. So remember what I said earlier. Time is one of the most important factors when it comes to trading. So without time, you have no business in the market. And another important thing in trading is risk management. I know you have been hearing this risk management. The simplest way I'm going to break it down for you is this. If you have an account size, let me say you have $100 account size. I want you to break $100 into 20 trades. So $100 divided by 20. That's exactly what I want you to do. So every trade you're going to take, you're going to use that figure you get. So 100 divided by 20 should be around $5. That should be around $5 per trade. So imagine you have a $100 account and you're risking $5 per trade, then you're good. You have to lose 20 straight trades before you lose your money. And another thing is that you must never increase that risk. You must never increase that risk. Because imagine you have to be consistent with what you're risking. Imagine you risk $5 now and you lose $5. You risk $5 again, you lose $5. Then you want to try and gain your money back. You now risk $20 and you lose $20. That's $30 down already. You see, that's why you have to be consistent. So when you lose $5, when you win a trade with $5, you win 1 to 3, you win $15. It's going to cover for 3 trades. So if you are not consistent with it, you have broken the rules of risk management. So you have to be consistent with risk management and its rules. So another thing is you should know price action. Learn price action, and that is the reason why I'm projecting my journey with you. I learned price action from ICT himself. He didn't teach me face to face. I just watched his YouTube videos, the one he posts on YouTube, and that is how I learned. That is how I'm learning price action, because I'm still currently learning. Till yesterday, I still watch some ICT videos because I'm not where I want to be yet. By this time next year, I want to be funded at least $1 million prop firm. So that's my goal. That's my goal ahead of the future. I want to be funded at least $1 million. So learn price action. Stick to time. Stick to price action. Stick to risk management, and you're good to go. You have everything you need in Forex trading. So thank you guys for joining me today once again. I wanted to keep this video really short, so I hope I did so. See you guys in the next video. Bye.